Hey there. Happy Friday. Welcome to The Hash on CoinDesk TV. I'm Zach Seward. We got the 4-box. Loving the 4-box. Will Foxley is here. George Kaludis is here. Sandali Handagama is here. What a squad. Let's do this thing. All right, Sandali, you're leading us off today. What is going on in the world of EU crypto regulation? What's up?
Thanks, Zach. So we have some good news from the EU today. The European Union's Markets in Crypto Assets Bill has moved out of the Parliament and into the next phase of negotiations between the European Council, Commission, and Parliament. So there's a next round to go. But the key thing here is that the draft that just went through does not have a very divisive provision that looks to restrict proof-of-work cryptocurrencies in the EU. This would have effectively amounted to kind of a ban on Bitcoin, essentially, because, when you restrict proof of work, Bitcoin literally has nowhere to go. So the crypto industry acted really quickly. Crypto advocates in the EU pushed back really hard on this, and the past few weeks have been very tense over there. The parliamentarian in charge of the bill has been quite stressed. We had a great quote from him yesterday saying, "I don't know what's going to happen. I really don't know. Let's see. This is politics." So this is very welcoming news for folks over there. I don't know what you guys have in mind. This could have gone in a crazy direction, but I think the day has been saved so far. Will, I don't know if you have any thoughts to add on what this could have meant for crypto.
Yeah, for the EU in general, actually, I don't know that market very well, so I won't opine on that. I will bring it over back to the United States and look at New York, which has a very similar bill going right now into, I think, the upper part of the Senate and the House there, whether or not proof of work should be banned for the next 2 years, a moratorium on proof of work within the state. And that itself is also going to be very stressful for the politicians on either side of that conversation, and for the people in the cryptocurrency industry who are obviously going to push back against that. I'm interested to see what happens there, and if the United States falls suit with the EU and doesn't go forward with it. Hopefully that's the case. That's the side I'm cheering on. But it is interesting to see at the same time we have this issue going on in the EU. It's happening in the United States, in some states. And it's also just part of the general conversation, right? This ESG thing, we talked about it all throughout this week since it's mining week at CoinDesk. It's not going away. This conversation is not going away. George, I want to throw it to you, though, and get your take on the story.
Yeah, before I say anything, Will, I love your glasses, man. They look great. This is great news, right? Yeah, man, you look great. Great news. I mean, if you're going to move forward with a regulatory package for crypto and you want it to actually work, you need to not lead with, okay, guys, you can totally use crypto, except for the one that jump-started this whole thing, because we're scared that we're going to have to buy even more Russian natural gas to run our country, and we totally need some sick political points right now, so we don't need to look bad. And I'm not going to pretend that I actually know how much teeth any of this stuff has in actually getting stuff done. But it is promising to see that the regulatory package or proposal or whatever it is came out to say with, okay, everything is good and, it's fine. Bitcoin is fine. While we're on the topic of proof of work, though, Ethereum is still proof of work, guys. So this would have banned also Bitcoin and Ethereum. And I know we're going to the merge, all that good stuff, to see if that actually happens. But imagine if this did go forward and we not only got rid of Bitcoin in the EU, but also Ethereum. Cutting out those two seems like a death wish for any country at all. So anyone want to latch onto that? Zach, you got anything? Sandali, I think I saw your hand go up, though.
George piping up for Ethereum. That's good. That is amazing.
Yeah.
Good work, George.
Hey, man,
George,
spend energy on whatever you want.
Well done. Well done. No, this has been a bit of a saga, and I think, Sonali knows this one best, right? It's gone back and forth, too close to tell. Who knew? It was there, it was gone, it was dead, it was back. Now, I don't know, maybe is this the real case closed is really my question to Sandali. She knows this topic rather stronger than I. So I'm going to toss it to her. Sandali, is this the last we're going to hear of this or no?
Definitely not, unfortunately. because this is so. Now it's kind of out of this markets and crypto assets package, but it was agreed upon based on a compromise, which means that cryptocurrencies, crypto assets will be subject to environmental standards in the EU in a different way. It's going to be kind of under their taxonomy bill. Sometime in the future, we won't see anything till at least 2025, but it is coming. And there is a good chance that since this sort of fact that green politicians and politicians from the left that were in support of this bill with bring it back onto the table. So we don't know what happened entirely yet. Did I freeze?
You kind of went robot style for a little bit there. Yeah, it was like
oh, no.
chopped up. It's okay. It's all right. It is what it is.
But yes, yeah. So we will definitely hear about this in the future.
All right, good stuff. Let's change gears. We'll stay in the realm of regulation, but we'll toss it straight to Will. Change up the venue. Will, what is going on in India?
Yeah, so moving to a different continent, but we're going to stay within the realm of regulations. And this is a sadder story than Sandali's. So India has passed stiffer crypto regulations around taxation for crypto. And actually, we had two different opinions in this story, so it'll be interesting to read those both to you guys here. So essentially what happened was this tax regulation that has been long debated within India has suddenly passed through. Basically, taxes 30% for capital gains, brings capital gains taxes up to the same level as like stocks in India. So crypto, stocks, same across the board for regulations. Some people were pretty sour about this and said like it's going to hurt crypto within the country. It's really going to hurt adoption, really going to drive people who are using crypto to other exchanges that are not within India. It's going to move a lot of entrepreneurs out of the space. But there's also some other takes within the story saying that this actually legitimizes crypto within the country as well, because there's now a regulatory framework. Even if it's a little onerous and a higher percentage tax than they would like, at least there's regulation, at least there's some clarity going forward. Sandali, I want to throw this story up to you and get your take. I don't know the Indian market very well, but it was interesting to see a few different exchanges pop up that are definitely have blossomed into being bigger players on the global scene. And then two, to see different takes on what this regulation means for the market.
Yeah, so this people were pretty optimistic when they decided to tax crypto, right? Because that meant, okay, they're recognizing this as a legitimate thing. This is good. They're not going to ban it anymore. But then you had the finance minister kind of say, just because I'm taxing this doesn't mean that it's legal, or something to that effect, or just like, I can't tax things just based on whether they're legal or not. Anyway, so then, this is pretty disappointing because they actually hoped that they could amend this and push it to a more friendly tax rate, but that didn't exactly pan out, and this was put into effect quite quickly. So people are pretty disappointed now, and there's also talk of a push for the industry to go up for a Supreme Court decision on this, but we don't know how or when that's going to happen. For right now, this is what's happening, and yes, there are concerns that it will drive this kind of booming industry, and everybody who's been excited about crypto in India kind of out of the space, at least in that local market. George, I don't know if you have any thoughts on.
Sure.
I'm just randomly throw it to George.
That's fine. That's what we do here in the Hash, right?
Yep,
Your comment about the, taxing things, I can tax things are illegal, bring something funny up that I was thinking about with the IRS tax code in the US, where there is literally something in the law that says you must report illegal income, which is hysterical, but it's kind of in that same vein. Like, we will tax you on everything and anything, even if it's illegal. It's sort of the idea of, this is how we keep the government going, all that good stuff, blah, blah, blah. We hate taxes. Anyway, the one thing that I read in this, and this cannot be correct, so I want you guys to correct me on this. Apparently, you can't there's no ability to take deductions for losses. How can that possibly be the case? I read that, and maybe I was reading far too quickly, but not being able to deduct losses on your crypto sounds like a death wish. Like that is to kill.
Quick.
Yeah. I guess if you just bag hold to zero, you don't have any taxes to pay anyway. But I don't know. That just seems like they're trying to kill this in a way where you can either ban something outright, or you can make it just impossible to own because you have to pay a lot of money. And it sounds like maybe that's what they're doing here. Again, I'm not privy to what's going on in India, but this is a lot of people who could use crypto. And if crypto is a great equalizer, the big economic, I'm running out of words. It sucks that people who live in this country, a lot of poverty here, may not be able to get to this just because of the government taxing the crap out of it.
Just going back to what Sanjay was saying really quick there, Balaji Srinivasan is a really well-known entrepreneur within like the crypto space and within the general tech market as well. And he's had some nice tweets about the Indian tech market, which I think a lot of Westerners just like, they don't have insights into it. It's just off their radar. But I mean, scroll through this article and look at the number of crypto exchanges that are noted in here. And these are exchanges with millions of dollars of volume, if not more. And so they're important for that reason alone. And this regulation means that those exchanges are possibly going to leak users. And that's part about crypto is like you can go to wherever the door is easiest to open. So if I want to use BitMEX, well, that's great. It's global. I just need a VPN. I can log into it. If I want to use Coinbase, that's pretty good. Maybe need some more KYC stuff. If I want to use an Indian exchange, I can do that. I can move my funds wherever I want to do it, wherever there's less friction for me. So whenever you see regulation like this pop around, it's bad because people can just pick up their money and walk with it wherever they want to go. And just circling back to what Balaji Srinivasan has talked about a lot, this whole market is booming with talent. I think a really prescient team to look at is the Polygon team, which India-based, and they have blown up. Like they have become the face of Ethereum in many ways. And the story of Polygon's founding is also extremely interesting. There was a nice CoinDesk piece about it a few weeks ago. And those people are now going to have to operate in a market that's hostile towards them with that 30% tax rate. And that also means that some of them might have to move away from that market and go to jurisdictions that are just more favorable to them. So around the board, I think this is a pretty negative story. I will note, though, there was that one comment that was interesting about this tax regulation legitimizing the asset class. Zach, I'll throw it up to you for a final take, though.
I mean, I think there was a lot of speculation that India would be the next China, right? Like China was like, nope, no crypto, it's done, right? So I think in the context of that, this is, I guess, somewhat of a more favorable outcome to the people who are making the comments like, hey, okay, it's at parity with the way, capital gains in other asset classes are treated. It is what it is, but hey, it's better than a complete ban that we saw, a country like China pursue last year. So I think that sort of backstory to me is important to this conversation, because the question of whether or not crypto assets would get some approval from the Indian authorities has been a long-standing question in this space. And maybe this is a mixed bag in terms of an outcome, but hey, beats now right bin. All right, we're gonna take a break. I think when we get back from the break, we're gonna talk about Jump Crypto. The thing about Jump Crypto, they got a lot of money, but they got a lot of devs. I didn't realize this. They employ like 140 people, 100 of them coders. What? Why? How? We'll talk about that after the break. It's The Hash. Happy Friday. Hey, welcome back to The Hash. It's me, Zach Seward. We're talking about Jump Crypto because they want to be talked about. They're sort of this low-key part of a big trading giant called Jump Capital, Jump Trading Group, technically. It's a bit of a branding salad. And Jump Crypto is the crypto wing of this one. It's often confused with other aspects of this giant group. But over in Barcelona, where the Avalanche Summit is going on this week, and where Tracy Wang and Lila Ledesma are doing some great reporting out of Barcelona on this event, one of the panels that was up there was Jump Crypto's president talking about what they're trying to do and why. And the thing that I thought that stood out about this piece is that what many think of as a venture capital firm is really pretty intimately involved in the technical side of things, the technical side of building products that live on some of these blockchain protocols, everything from Solana to Ethereum to Avalanche, which is probably why they were there. So a lot of good details in this piece, including a pretty staggering number that of the 140 employees of Jump Crypto, about 100 are on the developer side, which I thought was rather interesting. A lot of good stuff in here about an emerging player in the crypto VC scene. I'm going to toss this straight down to Will for his initial thoughts on Jump Crypto's kind of emergence into the investor conversation lately.
Yeah, Jump's definitely been around, but they've been pretty low key with terms of marketing. I don't think anyone outside of reporters or people who are interacting with devs and like the finance side of the space really would know who they are. The fact that they're coming out this way is pretty interesting. It's also interesting. It's like later in the bull market. We don't quite know where things are going. You think you'd try to make a name for yourself during like the initial part of the wave and not on the backside of it, but to each their own. The thing that really stood out to me about this itself was like they're employing people to build on these open networks, right? So they talked about how they have developers, 100 developers on the team that are developing things on Solana, they're developing things on Avalanche, developing things on Ethereum. Those are open protocols. Where are their incentives is the question for me, especially for something that's so hyper aggressive, capital intensive, something like a trading group like this. When they're building on an open chain like this, what do they get back in return? And part of the story here that Tracy Wang dug into was about the wormhole exploit that Jump Capital or Jump Trading Group, just Jump Crypto, there's like 4 names here, right? Like it's very confusing. Anyways, they plugged that wormhole gap, $300 million. And everyone was wondering, like, what's your incentive for doing this? What do you get out of this? And in this piece, they addressed it saying, like, we need to be players in the space that are open and available to fix things that are broken. And in the long run, we benefit from it. I'm sure that they made some money somehow else. Like there's a lot of token incentives out there. But to me, that's what really spoke about the story. We employed devs on an open blockchain so we can make money elsewhere. We can continue to build these ecosystems. So in the future, the trading scene looks completely different and then we dominate it. Zach, throw it back up to you.
It's really interesting to think about, right? Because it's like, strong systems, strong token price, and these firms have a lot at stake in the value of these networks, right? And I think it's kind of, 3 is a trend here, and we saw this from Paradigm earlier. We've seen this from Polychain, where they are employing dev teams that can, hop in a pinch. Again, lend value to these open protocols in a way that serves their big time investments in some of these open protocols. And so I think it's kind of an interesting novel approach that really distinguishes like crypto VC from like traditional VC, right? Definitely there's services that are provided to, portfolio companies within the traditional VC model and the crypto VC model. But then there's this other layer of protocol work and protocol development that is occurring sort of alongside some of these teams that they're funding to do this protocol work as well. Just the fact that like Jump touches, Pith, which is a big part of the Solana ecosystem because it's like the oracle in that network. Obviously Wormhole stepping in and sort of doing the world's first DeFi bailout. Their idea is, hey, if we can keep these things strong, our investments are stronger over time, even if we have to stomach that $300 million sticker shock of plugging the gap here, as was expressed in this piece. So, George, I'm going to toss it to you for your thoughts on Jump.
Yeah, the DeFi bailout is a hilarious thing given how mainstream Jump is. I know Jump Crypto isn't mainstream, but Jump is definitely mainstream. So Jump is pretty legit, right? Them's been prop trading and market making since the 90s. And a lot of these DeFi projects in my head have been creating ways to trade, via AMMs or, pooling your money together and somehow making money on the trades. These guys know trading better than anyone else here, better than probably a lot of people who have built any of these AMMs or these other decentralized ways of trading, these DEXs. They know how to make money. And the fact that they're coming in, they see an opportunity means that they can make money. And I have no idea how. Will, I think you agree with that. I don't know how they're going to make money, but they can trade. They know how to trade. Making markets is a very, very profitable business, especially when the markets weren't transparent. But let's see what happens now when the market is transparent. I mean, this is kind of a huge deal when it comes to, and again, this is the second time I've been, given the claps to not Bitcoin, but yeah, I think it's kind of a huge deal. It's trading, it's financial gamesmanship, but it's a way to make money. And the fact that Jump's involved here is kind of a big deal. I don't know. Anyone have anything to add to that?
Well, I think they do make money from like what Zach was saying is they support like these open protocols. They make sure the asset price stays high, which they have a huge bag in by making sure that the plumbing of it continues to work. And then they're also building a lot of things on top of it. So I wouldn't be surprised if this developer team, launches more AMMs or they launch like some sort of like crypto derivative product on top of it. And then you can issue your own token and then boom, like you've done pretty well. So there's a lot of ways to make money. I just think like the interesting thing is like when they jump into like the bigger exploits, like a $300 million hole, and they're like, hey, we'll still help out. Like this is an open protocol and we have a huge investment and stake in it. So let's develop it the way we see to develop it. But I think the next story we're talking about Google and some weird NFT plant. I don't know, George, what was that story?
Oh man, we changed it up on you. We killed that
one. The memo.
We're staying international, and we're talking about. Yeah, sorry, man. But I like your mention earlier about getting rid of your Western stereotypes because we have one here to attack. So my story / discussion topic is about how Web3, a term I usually hate using, but whatever, needs Africa. Web3 needs Africa, not the other way around. This topic was broached in an opinion piece on CoinDesk yesterday. Africa is home to the second largest Bitcoin market, and its whole crypto market grew by 100 billion in the past year. Kenya has launched a CBDC. Again, CBDCs are something I don't really like, but it's clearly an embrace of the promise of cryptocurrency. Y'all can say Web3. I'll do cryptocurrency, whatever. I'm going to avoid that. It might feel out of place, but Africa is actually a great place where crypto can enable financial inclusion. I heard about sending money on your phone for the first time from a friend of mine in college who had gone to Kenya. People have been sending digital payments over flip phones and smartphones there since 2007. The name of the network is escaping me right now. A lot of big statistics about this. One that popped up in the article was that 60% of all global mobile money transactions flow through Africa. Two things that come to mind here is something Will said earlier. Shut off your negative Western stereotypes of Africa and recognize it's home to big-ish economies. Places like Botswana have more GDP per capita than Brazil, depending on which metric you look at, but that's a lot. And there are a lot of people who live in Africa, right? It's 20% of the world's population. And when we think about what crypto, Bitcoin, Web3, all that jazz enables, it's technology for the people. Africa as a growth center for crypto makes a ton of sense. We should definitely be paying way more attention there. And the last bit I'll throw in, just because like why are you ever going to bet against this man, is that Jack Dorsey spends a lot of time in Africa, up to half the year. I don't remember what it was last was, but not one for financial advice. Betting against Jack Dorsey seems stupid. I'm not going to do that. Anyone want to latch on to anything I said there?
We should get like a long, Jack Dorsey long, like a synthetic Jack Dorsey net worth token, and you can like long it or short it, and that'd be fun. I'll riff on it. I think you're right. The Bitcoin peer-to-peer Bitcoin numbers have always been really strong in Africa. Like Nigeria is a force to be reckoned with. If you look at like local Bitcoins or Paxful data, they've always been sort of a leading country when it comes to peer-to-peer transactions using the Bitcoin network. So it's always interesting to see, and it is often kind of overlooked that sort of the payments use case is working for a lot of people in Africa and is really important. So you see that, you see other types of projects that are more blockchain related, more track and trace, other things that help various communities in that continent. But I think you're right, George. You're like Africa is sort of the sleeping giant when it comes to Bitcoin usage. And I think this is a great way to sort of invert that initial perception that you mentioned there. I'll toss it to Sandali though for her thoughts.
Thanks. Yeah, it's interesting because I love this piece, particularly because when I first started at CoinDesk, Africa, specifically Nigeria, was one of the markets I was covering quite a bit, just because of the wealth of stories from there to do with blockchain and crypto adoption, and even building out Web3. One of my sources there that I've actually become quite close friends with it has a school for Web3, and all these young people can join and learn how to build in it, what companies they could join after. And there's just such a tremendous interest in these new technologies and what it can bring to these communities. And most of these people are super young. Africa is a very young continent, so they are always ready to jump on this new tech and see what they can do with it. And they're always willing to experiment with it as well. So this piece totally makes sense to me. A lot of companies, I just covered one where they're going specifically to Africa to build this Web3 super app. And even they were like really surprised with how quickly people were getting on board and using it and kind of helping them build this out. And it's just nice to see this kind of narrative where, Africa is more important to crypto than the other way around, kind of coming out finally. I think it's very well put, to say the least. Will, I saw your hand go up.
Yeah, I'll go back to what George was saying earlier. I think it was BitPesa. I think if someone can correct me if that's wrong, but I think that was like the program that was used.
Yes, that was the one.
Yeah, super interesting.
M-Pesa.
M-Pesa.
That's the original one.
Yeah.
Super interesting project that, like you said, did go before Bitcoin, and people were using it on their flip phones to send money back and forth. And so definitely like that peer-to-peer nature of Bitcoin has been alive and well in Africa. And that's not been the trajectory a lot of these other projects have taken, right? We were just talking about Jump Crypto, we're talking about like all the trading projects that are on there. A lot of times, like that's not what these people are interested in. They want peer-to-peer money that you can just send on your cell phone back and forth. So it's interesting to see like the two market dynamics change there slightly when we have this conversation. But that's all the insights I have on this topic. So I'll give it to Zach as we close out for this Friday.
I'll wrap this thing. I'll wrap it. It's the Friday show. That's it. We did the week. We got through. We did it. We'll do it again next week. It was fun. Love talking to y'all. It's good times.
Very international today, guys. Good job.
Well. We really did some jet setting today. That was fun. All right. Have a great weekend, everybody. CoinDesk.com, your place for the latest in crypto news. CoinDesk TV. We'll be back on Monday. I'm Zach. That's Sandali. We got George. We got Will. It's good times. Have a great weekend. Bye.